Hey guys, good afternoon and welcome to Your Stocks. I'm Pavitra. With me is Ekta as always. And for the markets, it's looking quite good, right? I mean, we're almost 100 points higher on the Nifty. This considering that there's been no let-up in the Asian markets as well. And there's no looking away from the mid-caps and small-caps today, looking extremely solid.
Hi Pavitra. Yes, absolutely. We have a good advance decline ratio on our hands as well, with over 2,000 stocks advancing to around 1,660 stocks declining on the Bombay Stock Exchange. So it is a lot about the broader markets today, but not to mention that we're seeing good gains which have come in for the Nifty as well as the Bank Nifty as well. So up around 230 odd points plus for the Bank Nifty. We have the Nifty which is up close to around 100 odd points. So good time then to get in a lot of the queries that a lot of the retail investors might be having. Joining us this afternoon, we have Kush Bohra, who is the founder at kushbohra.com, to answer all of your technical questions. Kush, hi, welcome to the show. Well, before we start talking about the queries that we have, wanted your thoughts on the market. 19,413 is currently where the Nifty is at. Are you seeing it are you seeing a possible push to 19,500 and maybe sustaining at those levels?
Hi, Ekta. First up, thank you for having me on the show. Well, the last time I was here, on Friday in the morning show, I mentioned that as far as 19,250 is maintained on the Nifty, we should cover our shorts, perhaps even look at some long positions. So that's actually playing out quite nicely. My concern is that, we may not probably move, a lot higher from here. Just looking at the options data purely, 19,400 already has a very high call base, 19,300 has a very strong put base. So I'd like to see some unwinding on these, before I can say that, 19,500, 550 are the levels that, we are looking for in the near term on the Nifty. So for now, I think the move is done on the Nifty, at least for the day or for the next couple of days. But most certainly holding on 19,250 and testing it, thrice, in fact, rebounding from there, a very encouraging sign.
Okay, very encouraging sign. And Kush, what would you make of what we are seeing in the banking pack as well? Because it's a near 250-point move that we've seen. And today it is the private banks which are really leading this up move. Do you expect this to sustain?
This one I'm a little more optimistic on, and I'll give you a couple of reasons. There's a band of 43,300 and 43,600 on the Bank Nifty that has been the medium-term support zone. Even this current fall that you see, 43,600 is where the Bank Nifty made its low, and we've rebounded from there. As you rightly pointed out, today is the private banks. On Friday and Thursday it was the PSU banks that were taking charge. So there is some sector leadership that is starting to emerge from both the corners. That is giving me more hope, more optimism on the Bank Nifty that this rally might sustain. Even though 44,000 has a strong call base, it might come in for an unwinding if we hold above that for some time. So 44,400 is where I see the Bank Nifty heading in the coming days.
Okay, all right. So that's on the Nifty, Bank as well as the markets. But let's get to some queries then. We have Sanjeev who writes to us from New Delhi. He holds 100 shares of Paytm, which is bought at around 650 rupees. He wants to know what to do, whether to remain invested or book his profits and exit. We have Vijay Chopra who's joining in on the phone line to discuss the fundamentals as well. Vijay, well, we'll toss it over to you on Paytm.
Well, I think that I have mentioned earlier also on your channel, when Vijay Sharma started buying around 650. I think that, this was a great price where the original promoter started to buy the stock. I think that if somebody is there for a long haul, they should buy Paytm on dips. I think that it has the potential of going up to 50, up to the listing price. So I would recommend that, keep on buying Paytm because I think that the visibility is now very much clear. The valuation is now more reasonable, and Paytm should be bought on declines. And this is for a longer term. So we might see some dips, but I think that in the long run, it can go again to 2,000 if somebody holds for about a 3-year period. So I would definitely recommend to buy on Paytm on decline.
Oh, wow. You're sounding very optimistic, Vijay. I have to ask you, are there any of the other new age companies that you think, are looking good at these levels? I know a lot of them have corrected, but do you think any of the others also warrant some attention right now?
Well, I think that Zomato, I have mentioned on your channel when Zomato was trading about 40, 45, that it is a level which is, I think, very convincing. The kind of trends we are seeing, that people are ordering food online and they are more comfortable ordering food online. So I think that Zomato is another company I would buy on a decline. I'm reiterating that whether it's Paytm or Zomato, I would wait for a correction and then enter into these stocks. So these are good companies, according to me, which can be bought into.
Okay, and Kush, would you agree as well? Especially on Paytm, considering it's bought at 650. I mean, already a decent amount of money has been made on this, but do you think it makes sense to keep the faith here?
Give a perspective from the long term. Let me address it from the near to medium term kind of a scenario. You're spot on. The buying price is somewhere close to 600, 650. So a neat 30, 40 odd % kind of a returns already being made on this in a short span of time. My suggestion would be, if it's a trading bet, it's not a bad idea to book partially and hold the rest for targets of 900 plus. Now if you book now, the rest of the quantity should have a trailing stop loss somewhere close to 780. That's where the support zone lies. So yeah, that's how I would play it from a strategy perspective. Book partially right now, hold rest for the targets of 900 plus.
Okay, all right. Bullish calls coming in on Paytm. Let's get to another query then. We have Lakshmi Rao, who writes to us from Chennai, holds 25 shares of Adani Green, which is bought at around 2,600 rupees, 12 shares of Bajaj Finance, which is bought at around 7,600 odd rupees. Medium-term investor wants to know what to do with future prospects of both of these investments. Adani Green is a bit of a loss-making, counter for the person, but even Bajaj Finance, just about making a little bit of a loss. What would you recommend, Vijay, when it comes to both these counters, and also your view on Bajaj Finance, considering that we're seeing a bit of traction today and no negativity coming through despite the Jio Financial Services listing?
Well, definitely a Jio Financial listing would be, there's a cat amongst, so I think that, in the longer term, Bajaj Finance, Bajaj Finserv both look good, but I would wait for a correction to get into. And I would not recommend that you go and buy right now. So Bajaj Finance is a buy on dips, according to me. And what is the second stock you mentioned?
Adani Green.
Yeah, so Adani Green, if somebody has bought at higher levels, they should try and average at these levels. I think that, the stock has been consolidating for a long time. We have seen, Adani Power, we have seen Adani Enterprises, we have seen, all the other, Ambuja and ACC also, they have shown quite some promise. And most of the stocks have come back also quite nicely. Adani Green hasn't started yet, according to me. So if somebody has bought it at higher levels, so it would be a better idea so that they can average around these levels and bring their cost price down. Probably, they can buy it here. And then I see some green shoots happening in Adani Green, and it has corrected quite a lot. And I think that it can go up if somebody buys with a 1 year's perspective.
Okay, got that. Kush, what would be your view on both of these? I mean, the buy price is a little bit high even on Adani Green, but considering it has corrected so much and it has been in this sort of range for a while, do you think from a medium-term perspective you should hold at these levels?
I just don't see this moving high too fast. So maybe 1200 to 1300 is the zone where the stock could go to in the near term. It's dabbling very close to its moving averages, even the long-term ones. So once it moves somewhere close to that range, it's probably a good time to exit. In fact, this is the one that I'm a little worried about. Bajaj Finance, not so much, because we've seen time and again that Bajaj Finance has a tendency of getting into a trend and moving higher quite sharply. So Bajaj Finance is a very clear hold. Adani Green, hold for now, but exit close to somewhere 12 to 1300 kind of levels. It might be a while before they see some profits on Adani Green at least.
Okay, got that. Let's also try to get in one more query. We have Ramesh Rajagopalan, who writes in from Kerala. Now, he holds 550 shares of Indian Hotels, which he bought at 195 rupees. So, he's definitely making money there. He also has shares of Adani Enterprises, 550 shares of Adani Enterprises, which were bought at 41.5 rupees. So, he's a long-term investor. I'm not sure if that buy price is correct, but if it is, then well, good for him. It's a big profit that he's seeing on this one. But on both of these stocks, Kush, what would be your call right now? Do you think these are stocks where you would continue to remain invested, or would you suggest booking profits here?
Not at all. In fact, both of them have a very strong base. In fact, if I look at Indian hotels, it's formed a very strong base. It's moved up quite sharply, and then again, the consolidation also is with a positive bias. So as long as 370 holds, I don't see any kind of structural problems with it. This is a base formation. The stock's getting ready for higher levels. So 425 is where I see the stock moving for the next, couple of months, at least within the next couple of months rather. So definitely a hold on this one. Adani Enterprises too. We know the kind of volatility that the stock witnessed, but I think that's a matter of past now. The stock's consolidating. Bias here also remains positive. It's under its 200-day moving average, and hence you see some kind of sluggishness. But I think once it crosses this 2650 kind of zones, very close to that now, then I won't be surprised to see the stock move up to 2900 and even 3100 kind of levels. So a very clear hold on both of them.
Okay, all right. So that is coming in terms of an answer both on Adani Green as well as a couple of other stocks. We have Rahul now, who writes to us from Mumbai. He holds 500 shares of Raymond at a buy price of 420. He's a long-term investor, wants to know what to do with this particular counter. He's currently sitting on a good profit, whether to hold or sell this particular investment. Well, long-term holder. So Vijay, I'm going to ask you about this one. What would you recommend on this?
Well, I think you should book half and get that money into Vardhaman Textiles. I think the textile has started moving, and I see the next 6 months to 1 year's time frame good for the textile companies, because the festive season is approaching, and if at all we do not see any kind of a big jolt, I think textile companies should do well. So booking half the profit there and shifting it to Vardhaman Textile won't be a bad idea. So VTL also I see a decent up move in the coming days.
Okay, and Kush, do you agree? But what would you suggest on Raymond right now?
A very similar view. There is nothing in the stock to suggest that the rise that we've seen from 1100, 1200 odd kind of levels, that it's stopping. The stocks very comfortably traded above its short-term averages as well. A minor pause, but if you put it in context from what the markets have done, the stock's actually done fabulously well even in the recent past. So very clear hold. Don't be surprised to see 2250 and 2400 kind of levels also in the coming quarters on this stock.
Okay, all right. So that's on Raymond. Well, that stock is just about higher by around 0.5% at this point in time. I'll just watch out for a couple of these stocks, such as Krishna Diagnostics from the broader markets. For example, that one has spiked up to the high point of the day. It's given returns of over 20% this year already. Currently, it's at the high point of the day, up around 7%. We're seeing some amount of good traction coming into a couple of these Adani stocks. So follow on buying from Friday's trading session. Adani Power, Adani Transmission doing well. We also have something like Thermax, which is not doing too much in terms of volumes, but in terms of price action, at least, Thermax is up around 4.6%. Take a quick break, but up next, we'll answer more queries on the other side. Stay tuned. Welcome back. Well, stable for the markets. Good day for in terms of at least the start to the week. We still have Kush Bohra here with us to answer all of your stock queries. Let's get to another question then. We have Deepak Kumar, who writes to us from Gujarat. He holds 30 shares of Coal India, which he's bought at around 200 rupees. He's a long-term investor. At this point in time, he wants to know what to do with his holding, whether he should buy more or exit at current levels. What would you recommend, Kush? He's sitting on a marginal profit at this point in time, close to his buy price. What would you recommend?
Exit on this one. The entire power sector has seen some kind of pump up. The PAC space also has seen a move up, but this stock's just not able to participate in that one. Any kind of bounce, and then that's getting sold into. It's trying very hard to maintain this 225, 230 kind of zone. So if any kind of breakdown comes from here, then the stock could fall to 200 levels again. Right now, he's sitting on a neat 15% odd profit. Not a bad idea to take money home and switch to other stocks. So Coal India would be an exit from here.
Okay, Coal India would be an exit at these levels. All right. The next query comes in from Rahul Kapoor. He is writing in from Bangalore, and he has 1452 shares of L&T Finance at the buy price of 83. He says he's a long-term investor and wants to know the future prospects of this stock. Kush, from a long-term kind of perspective, does it make sense to hold on to this one? He's already making money here. What would you recommend on this?
Well, even if you see the long-term kind of scenarios, the stock hasn't really made as much wealth for investors as some of its counterparts, right? So my suggestion would be that, even now, looking at his buying price is sitting at almost close to 50% profit. The stock's actually given way from 140 kind of zones. So I would suggest, book it partially, book, about 50% of it. You're still making 50%, returns on this one. Hold the rest with a stop loss of 110. If the stock does move up, then I think 145, 150 are the zones where you should exit, the rest of the lot as well. And as far as investing this amount goes, there are plenty of other options also in the NBFC space that the gentleman can look into.
Okay, so seen good amount of returns for L&T Finance Holdings. That stock has given returns of over 55 odd % just in the past 12 months. But let's move on. We have Venkat, who writes to us from Hyderabad. He holds 600 shares of RVNL, which he's bought at 126 rupees, and 1000 shares of Bank of India, which he's bought at 76.5 rupees. He's a medium-term investor, wants advice on other PSU stocks for further investments of 5 lakhs for the medium term. With specific question, 1, Kush, what should he do on both these stocks that he holds? And 2, any other PSU or, within that space that you would recommend technically?
Sure. So as far as RVNL and Bank of India goes, let me start with RVNL first. Stock's very close to his buy price, so that's not too much of a worry. Just gone into a bit of a consolidation. I would hold this one with a tight stop loss at 118. If that breaks, the stock could actually come into a bigger round of profit booking. Just to put things in context, the stock's actually moved quite sharply in the last 6-8 months or so. So I would suggest hold with a stop loss of 118. If it breaches, then it's best to probably exit. The targets on the upside are 130 and 145. So as and when the these levels are met, it's a good idea to keep booking partially. As far as Bank of India goes, very interesting pick. I must congratulate him on this. The entire banking pack hasn't really done all that well, but this stock has actually moved quite significantly from levels of 70. Hold on to this one. Nothing to worry about. About 85 is where I would place my stop loss. My near-term targets are 96 and 102. Now, as far as anything else from the PSE space goes, I would suggest SBI, despite the kind of, or rather, in spite the correction that we've seen, it's a good idea to buy SBI at these levels. 550, 555 kind of zones are the medium-term support zone for SBI, and we've seen it revive from here. So it's not a bad idea to get into SBI at these levels. Very sharp profit booking from 620 levels. So the entry point is also very attractive. Exactly opposite of this is the power space, where REC and PFC have been doing well. So not a bad idea to allocate some money to REC as well. The stock's on the rise. If it comes down to about 225 odd levels, you see some kind of dips on this, then REC is also one stock that I will have on my radar from the PSE space.
Okay, I'm sure that's very helpful for our viewers. But Kush, I'm going to ask you a question now on one of the new listings, which is S. Jayakumar. He writes in from Tamil Nadu, and he says he has 1000 shares of SBFC Finance at 84.80. Now, the stock saw a very good listing, right? I think it listed at an over 40% kind of premium. He says he's a long-term investor and wants to know what he should do. Should he get out with just this minor profit that he's seeing right now, or should he, stay invested in this one? Saw a very good listing, but the question is, how much more of an upside do you see from here?
Pavitra, I'm really sorry. Very limited data on this. So from a technical perspective, there isn't much really that I could guide the gentleman on. So I'll have to give this one a pass.
Okay, no problem. We're going to get in another one. This is Shivani, who writes in from Noida. She holds 110 shares of KPIT Technologies. Now, she bought this at 55. The stock is, okay, this is, I think, a wrong chart which has come up for you, but this is on KPIT Technologies, and she bought this at 55. She wants to know whether she should hold or sell these shares right now. So, seeing a good profit on this one. Kush, do you think it makes sense to hold this one? I don't know the time horizon because she's not mentioned it, but, you take us through what you would recommend both for a short to medium as well as a longer term view.
Plenty of data available on this, no worries, on that front at all. And this is a stock that, we've been recommending from the IT space for a very long time. This is one of our top picks. This isn't your, a very typical, service provider kind of a stock. So that actually helps its cause. It's been gaining from strength to strength. The profits are humongous, 55 rupees, the buying price, stock close to about, 1100 plus levels right now. Nothing to suggest that, she should book right now unless, money is a want or a necessity. I'd say hold on to this one. Once the IT sector picks up as a whole, that could be a tailwind for the stock. I see levels of 1250 and 1400 in the coming quarters on this one. So a very clear hold on KPIT.
Okay, hold on KPIT Technologies, which has been a rank outperformer, almost 100% in terms of returns just in the past 1 year. Thanks, Kush, for joining in and taking us through all of those questions. That's all the time that we have on the show. But do remember, as always, you can email us all of your queries and we will address them with our experts. Stay tuned. Closing bell will take you through the last hour of trade.